Good morning, everyone. Ayla, this is Perfect Entry, and today I'm showing you the gold shark strategy that we've made for trading gold specifically, because we're 4 weeks into January and you're probably still not making profit yet, so let's fix that. I'm going to be probably for most of this video really overexposed because for most of the filming I'm going to have this curtain open, and as you can see, it's horrifically sunny. That's the joy of Dubai. So now I'm bathed in sunlight, we're going to jump straight into the gold shark method, the backtesting data that goes with it, how it looks on a chart, how you trade it, how you make money from it, and we'll get everything done very quickly. First things first, what are you going to need? You're going to need these 4 indicators. First things first, you've got Pip Hunter BackD. I've set these to area. All the colors I've set to orange and purples because I've set it to a colorblind mode so that people can copy the template easily. Settings for this are perfectly default. Then we've got BJTSI. Again, I changed the colors to orange and blue, orange and purple. Other than that, no other changes. We've got baseline overlay. This is really just here for beautifying reasons. So I've set the candle colors just for the sake of it. And the only other plot is this one. The setting for that is 50. Now this is a change from the normal setting. Normal would be 200. Other than that, it's perfectly fine. And then we've got LMI. LMI, I've got a setting of 1.45, 40, and 2.5. And then again, just orange and purple for colorblind mode. How do we trade it on a chart? Very simple. First candle, the LMI goes shark out of water, which is where it either breaks out of this yellow or it breaks out of this green. You will look and see if all of the other conditions are met. So in this case, we're looking for bullish on BackD, which is just being purple, bullish on BJTSI, which is being purple, and we've got to have a bullish cloud, which we have all 3. This was the first candle that broke. You can see if I move it here, it's on the other side of the break. So this was the first candle it broke. We then take a trade at the end of that candle close. Stop loss is set to either the far edge of the cloud, or in the case where the candle is longer than the cloud, let me just move that. You see that this candle is longer than the end of the cloud. We just go to the end of the candle, and that's how you would set it in this case. So that is our 2 ways of setting stop loss. Our take profit, currently for gold we are running at a 2.5 to 1 risk to reward. So whatever your stop loss is, set your risk reward at 2.5 to 1, and we know that statistically you should be okay. Important things to note, we cannot stack entries and we cannot take entries that when there would be other entries available. So for instance, right here there would be another shark out of water scenario. However, because we should be in this one, we cannot take this one. Even if we missed this first one, we cannot take this second one. And the same here. You'll note that there is this entry, there would have been an entry here, there would have been a couple of entries in through here. We cannot take them because this one is still active. The other thing to note is that if any of these don't meet the condition, you cannot wait for them to hit their condition to then take the trade. The only time we take an entry is when they're already met and LMI is the last thing. We do not take a trade when BJTSI is the last thing. We do not take a trade when BackD is the last thing. It's only when LMI is the last thing. Important word of note, the easy way to trade this is actually by setting alarms. You click onto LMI, you click the 3 dots, add alert to LMI. Then you can go bearish shark out of water, once per bar close. I have TradingView Premium so I can set open-ended alerts, but for you I would just say set it as far into the future as you can, and then create, and then you would do the same for bullish shark out of water, and again create, and then any time you get one of those alerts, you'll be able to very quickly open your phone and go, there's an entry, work it out, enter it, put your phone down, or you have to sit and watch otherwise. So it's far easier to set your alerts, set them as push notifications to your phone, then just walk away. And the only time you ever look at a chart at that point is when you get given a trading opportunity, and then all you have to do is go, have I got a trade? And then sometimes you might get it where it's like this one, which was a good example. This was the candle it broke. You can see that we were still the other side of the cross, so there was no entry in this case, unfortunately. Shame, because it would have been a winner, but it does help filter out some of the losers that you would make otherwise. Again, no taking late entries, no taking repeat entries. You have to wait for what would be the original one to close, so we couldn't take this trade, for instance. And again, we couldn't take any of the little break in and outs through here, even though we may not have had this one. We cannot take any of these. It keeps everyone on the same cycle, and it helps us out immensely. Now, the backtesting data, you can see that we are running through, and every single day, I've been updating this recently as well, running through the data. You can see this is the column for 1% risk per trade, this is 2% risk per trade, this is 3% risk per trade, and this is 10% risk per trade. You can see that it starts on the 8th of January, which was about 12 days ago at this point. And we have been running through, keeping up with the data. I've been tracking every single win and loss that it should have made. Across all sessions, we are at a 44% win rate. It only needs, because we're on a 2.5% risk reward ratio, we only need 28.5 to be profitable. Gives you a profit factor of 2, which is ridiculously high. Like, if someone can offer you a profit factor of 2, that's a good system to take. You can see that we've also split it down by sessions. The way we do that isn't we just look for the first trade in that session. We always look on the 24-hour cycle for just taking trades and seeing what would be held, but it's what was taken in each session. So you can see that I've marked up here. In London session, our gains have been 17.91% so far this month. In New York session, it's 10.6, and in Asian session, it's 19.2. Win rate for Asian session has been 50% so far, which is a 2.5 to 1 profit factor, which is wild. Most people will never be able to offer you that. In New York session, which is currently its worst performing session, is a 39% win rate. Still, again, 11% over the requirement, and a 1.6 profit factor, which is huge. London session is just sort of 1.9 profit factor, although it doesn't take a lot for it to jump up to 2. It's literally one trade away from potentially hitting that 2.0. Current win rate is 43% in London. Again, that's still a huge leap considering 28.5 is the profitability point. I will be continuing to post this method in terms of updating the spreadsheet. If you want access to this spreadsheet, click the link in the description below to join our Discord. When you're in our Discord, you'll be able to see it in the Trading Strategies chat. If you want access to this, I've also included the setup and the template in the same very spreadsheet. You just have to go to the setup page and then copy in all the information you need. If you have any other questions, please leave them as comments in this video. If not, then we will see you in the chat. One final thing, if you are trading a prop firm, we have tested and looked at the average drawdown. In theory, you should be able to get away at an 0.7 risk per trade. However, I'm going to actually recommend you drop a little bit further down and probably go to 0.5. Although we haven't had any significant losing streaks, you can see that there's a loss streak of like 3 here, but the peak loss streak is this one at 4. However, over very, very long periods of time, you might find you get slightly higher. Now, the other way you can do this is that your first 3% of your drawdown, you can take 1% risk per trade, so 3 trades, then cut yourself down to 0.5% for the next 4. That would then bring you to 5% total. And then from there, you would just trade like 0.25% risk per trade and wait until you've recovered back into the higher categories of risk allowed. Again, if anyone has any questions, do let me know in the chat and I will answer happily. Thank you. I am Taylor at Perfect Entry. Thank you for watching.